Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at John Sneisen, and let's talk a bit about Australia, because we've gone into a lot of what's been happening in Australia over the years regarding the housing market, especially, not just, the tyrannical government, but what else can we expect from a government anyway, and all the people getting banned from the country and all that craziness. There are serious concerns, go figure, by the hand of the banking system and the government, etc., regarding the housing market, which was highly bubbled up, and then we saw, the climax kind of hit in a lot of places like, Sydney and Brisbane and Adelaide and Melbourne and Perth and all these other places. Yes, we know our Australian cities. In fact, some of our biggest audiences are actually out of Australia, which is why it's important to bring you guys this kind of information while you're still allowed to get it anyway. But anyway, as this Business Insider Australia article says, there's few signs the weakness in Australia's housing market is easing. And as the article goes into, Australian auction clearance rates weakened slightly last week despite fewer properties going under the hammer and poor reporting levels. And home prices are continuing to fall. According to CoreLogic, Australia's preliminary combined capital city clearance rate fell to 56% last week, down marginally from the initial estimate of 56.1% reported 7 days earlier. The modest decline came despite fewer homes going under the hammer, declining to 1,669 from 1,894 in the prior week. Of those auctions held, CoreLogic received results from just 1,160, equating to a reporting rate of 69.5%. That was well below the 74.8% level seen 7 days earlier. Of those results received, 650 homes sold prior to, during, or after auction. 510 failed to sell, including 68 properties that never made it to market. The preliminary clearance rates for homes stood at 55.7% for the week, slightly below the 57.2% preliminary estimates for units across the capitals. With results from so many auctions yet to be received, it suggests that there will be a sizable downward revision to the national preliminary estimate when final figures are released on Thursday last week. Late results tend to be for properties that fail to sell at auction. In the prior week, the preliminary estimate was revised down from 56.1% to show a final clearance level of only 51.4%. Given that reporting rates were significantly weaker on this occasion, a final clearance rate of around 50% appears likely. Demonstrating just how soft last week's performance was, in the same corresponding period a year ago, Australia recorded a final combined capitals clearance rate of 62.7% from a substantially larger 3,990 auction held. Put bluntly, even with soft market conditions discouraging homeowners to sell their home, including via auction, clearance rates are still very weak compared to the levels seen in prior years. Across the capitals, Sydney once again recorded the highest preliminary clearance rate across the country at 62.2%. However, just 60% of results were reported to CoreLogic, pointing to the likelihood of a substantial downward revision to the preliminary figures as late results come in. Auction activity across Australia's largest and most expensive city were also well down on normal due to the New South Wales state election held on Saturday. Melbourne, at 57%, recorded the second highest preliminary clearance rate nationwide behind Sydney, although weaker volumes and a decline in reporting levels also point to a larger than usual downward revision to its final clearance level. Across the smaller capitals, preliminary clearance rates weakened in Brisbane, Adelaide, and Canberra from 7 days earlier, but rose modestly in Perth, demonstrating that higher clearance rates in Sydney and Melbourne, at least in comparison to those seen late last year, aren't helping to boost home prices. Median values in both cities continued to weaken last week, falling by 0.16% and 0.15% respectively, according to CoreLogic's daily data. Elsewhere, prices also fell by 0.26% in Brisbane over the week and by 0.4% in Perth. Adelaide at 0% was the only capital to record no change in median value from 7 days earlier. So far in March, median prices in Sydney have now fallen 0.8%, faster than the 0.6% decline seen in Melbourne and 0.4% falls registered in Brisbane and Perth. Adelaide prices have fallen by smaller 0.2% since the end of February. March is typically a seasonally strong month for home prices, usually benefiting from fewer listings in late January and February, where much of the settlement data is sourced from. So, John, let's talk about this a little bit. I think that it's very demonstrable that you could see that there's been a huge pullback in the market in Australia due to multiple reasons that we've seen countless times in other countries around the world, the United States included, going back to 2007. What do you think is a symptom or what has led to these symptoms, and what do you think is the end result of this obvious downturn?
Well, first of all, the symptoms, it's quite easy to state that, and that's just too much printing of money. And of course, super low interest rates in Australia has shoved a whole bunch of money into the housing markets in Australia, which has propped up the prices very substantially. That has been completely unsustainable in Melbourne and Sydney and a couple other major cities as well. But what is more interesting to look at is other things that are just happening in Australia. For example, the Reserve Bank of Australia has been selling its gold over the last couple of years, Josh.
Sounds familiar to Canada a little bit.
At least they have way more gold than Canada has, because we got 70 ounces or whatever they claim we have.
So it won't save them, though, because Venezuela is basically running out of gold right now, and it hasn't saved them much because, they still don't have enough to make up for the vast amounts of debt that they've created.
No, and of course the debt in Australia is substantial, both on actually the chart here that I'll show you. I'll show you a couple of charts here throughout this video, and this is actually from my Australia report that I put together. It's a 54-page report that I used about a month to put together. So it's a substantial report. You can get it if you actually send me a message on my email, which is john@theeconomictruth.org. And you can then I'll give you all the information you need to get the whole thing, because I can only go through some very important points, but there's so much to it than just that. So, for example, one point is that they were 120% household debt to GDP. That's bigger than their second competitor, which is Canada. Over here, of course the former British unions are getting together and fighting strong with printing money,
including the giant prison island.
Yeah, exactly, the prison island, and not to mention New Zealand, which is of course their sister state, basically. That the banks in Australia actually controls what's happening in New Zealand, because the banks are massively borrowing money. They're by far the biggest borrower by commercial banks in Australia to New Zealand, and New Zealand's stock market is on a rip. Like, it's one of the most highly overvalued stock markets. So that again shows you another danger that's out there for Australia.
Unfortunately, with mentioning places like New Zealand right now on YouTube, the algorithm is going to pick that up. So we'll just make sure not to mention that in the description or anything, or in the tags, because YouTube cracks down on anything regarding New Zealand, as we know what the reason why.
The economy, guys, not something that happened somewhere.
But these days on YouTube, you talk about the economy and they think you're talking about the J word, which, that's unfortunate because that's them being anti-Semitic, not us, but whatever.
Or the conspiracy, realm. Of course, like all the stuff that we talk about, all the facts that we give out, they're all, made up by me and Josh. Of course, it's, nothing to do with the real economy at all. No. Anyways, then they have something called the financial claim scheme, which is their version of the CDIC or the FDIC in the United States, which is the deposit insurance. What I found out, and I had to dig forever to find this, Josh, and it was dug down in some legislation that shows that they will give $20 billion to any failed banks, the government will. And the APRA, I think it's called, the organization that actually pushes that out if a bank fails. The problem is, Josh, I looked at the major banks. They have between 600 to 800 billion in deposits, not 20 billion. So that is not gonna maybe work so well for the people that have below 250,000 Australian dollars. That is supposed to be the insured part. I don't know how they're gonna pull that off. That's such a big joke. And then of course, I don't know. There's so much else to go through about the Australian economy. They're, of course, a heavy resource economy like Canada. So they have been taking a hit that way. And, of course, I totally forgot one of the even more important things is what's going on in China with all this debt getting printed and the massive, substantial debt bubble that they're blowing, because they are trying to make themselves into the U.S. empire, but in a super short period of time, because now they have electronic money. They can just print like crazy out there. And they are a massive contributor to the real estate boom, to everything that's happening in Australia.
Statistically and mathematically, China and India have to surpass the United States in the coming years. And if anyone knows anything about propping up housing bubbles, it's certainly China, and creating vast amounts of debt. It's so over the top that it's almost unbelievable. But anyway, go on, John.
Yeah, and also let's mention the interest rate over there in Australia. That is have been flatlined. Look at this chart here, Josh, where you can actually see how it's been super low all the time, and they haven't even jacked it up yet. And their economy is crashing. That is just a terrible sign when you can't even jack up the interest rate and it collapses down. That is just a massive show how bad the debt problem is in Australia. And then, of course, I don't know what else to say. Australia has been also a huge state when it comes to police state as well. We've been talking about the passports, biometrics, all this stuff that they're trying to implement over there. And of course, certain people that just recently have not gotten entry into Australia. That's another thing. And that, of course, happened also in the UK, interestingly enough. I wonder when Canada is going to, and Trudeau is going to push out some of his policies.
Yeah, a couple of days after we interviewed David Icke, on the same day that we posted the video with David Icke, he's banned from Australia, then Milo Yiannopoulos, and I believe Lauren Southern and stuff like that. You don't have to agree with the people, but this idea of a giant nation state, this big landmass deciding that certain people can't come in, is very communistic, really. It's basically you have to admit that the government owns all that land, that public property is government property, and that therefore which is a kind of out of the planks of communism, by the way, and therefore that they own everything in that property, which makes you a bunch of cattle for the state. So that's worth mentioning in this report. But yeah, I mean, the rules, regulations, taxes, control of the populace, the debt, the subservience, a push into debt that they're bestowing upon the populace after years and years of printing, years and years of propping up, is absolutely alarming. And people in Australia are facing a serious problem going forward regarding their own enslavement, which it's a normalization process, right? It's an incremental frog boil of collectivism, and over time, before you even realize it, over time they incrementally increase the amount of enslavement to the point where you're completely enslaved and you don't even realize it happened. It's all usually under the guise of convenience too. And we saw their push towards technocracy as well in Australia regarding facial recognition, which is becoming a huge thing, including kind of this test plan using passports, which isn't completely taken over yet, but it's definitely something that they're pushing forward. So yeah, there's so much piling up in Australia. What is one to do? What do you think, John?
Well, of course, I'm just going to mention one last thing, and is the Australian dollar is losing at a lot of value as well.
Race to the bottom.
You know how you had the US dollar to gold? It's been kind of like just up and down, up and down. Well, meanwhile, in Australia, it's basically at a record high. And it's back over what it was in 2009 at the peak of gold. So that should warn the Australians a bit that what's going on there with their currency. And we're seeing this in Canada as well. Very similar. It's very interesting how similar the Canadian and Australian economy is, Josh. They're very intertwined. They're both resource-based economies that, of course, have the government just leeching off of everything that has to do with that and stealing that money and then enriching themselves on massive salaries that the government and politicians are able to have versus the people that are out there doing everyday work that actually gets the economy rolling. They are the ones that are getting screwed big time. The middle class and And of course, the poor in Australia is getting devastated by this massive money printing. And then you hear to talk about this inequality. Well, it's because of all this money printing, because the availability of that currency is, of course, mostly at the top, to the people with the good credit scores that are, the Warren Buffetts of Australia, or whoever that is that borrows the money. They are the ones that are making themselves super ultra wealthy because they buy all the assets, and then suddenly the price rises again. And it just pushes up everything for everybody. That makes it super unsustainable for the everyday Australian.
They're scum. It's like your regular ambulance chaser. And I mean, when it comes down to it, just vast amounts of inflation, the purchasing power skyrocketing, the purchasing power diminishing, the price of living skyrocketing, and all the same, all these regulations, taxes coming in, destroying small businesses, propping up major monopolies, and pushing people onto the street and into debt. Meanwhile, all under the guise of helping those people and stopping the things that they're creating. It's the Hegelian dialectic, a problem, reaction, solution, repeat for eternity, and it never ends. As long as people continuously believe in the system, continuously bow down to the system, continuously eat up this entire plot to enslave the populace slowly but surely, all through that incremental frog boil that I talked about. And John, there's many solutions to this problem. I mean, there's no shortage. There's more solutions than there are problems in the end. And in the end, it really does come down to, I know you're looking at more stats, John, but I'm going to go into the solutions while you're at it anyway, which is, food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, and of course, gold and silver to preserve your purchasing power. It's wealth insurance. It's not meant as an investment. This isn't investment advice. This is my opinion, but nonetheless, this is very important. You look at history and it tells you a lot about this, and obviously not depending on the government or the banks to have gold, or to have a gold standard or whatever, what you will. It's not about that. They'll just centralize it using legal tender laws, create more paper than they have gold, and even if you had a way to stop that, it's still the state enforcing rule on other people. There should be competing currencies, but nonetheless, as an individual, you should look at gold and silver, in my opinion, because we've seen that throughout history always prevail. And of course, there's a scarcity, application, use, and demand with something like gold and silver, which plays a lot into its value going forward. So, of course, we do have an affiliate link with Mike Maloney below. Check the links or the comments if we're even allowed to, because right now, I mean, they haven't been allowing me to pin comments with links for the last few days on YouTube, so I'm not even able to post the links below. So just look in the description if you don't see the comment, but nonetheless, and also check us out on Subscribestar, because we're being shadow banned incredibly, so we'll be posting subscriber-only content on there, not safe for YouTube content, if you will, but nonetheless, there's other solutions as well, like decentralized, properly, fundamentally useful cryptocurrencies and blockchain infrastructure technology that can replace that system. Even if 90% and 95% of that market is terrible, doesn't change the fact that 5% is changing the world, and individuals shouldn't wait to get involved in that. They should, in my opinion, look at that and try and preserve their wealth, diversify their portfolio, and hold multiple things, not just gold and silver, because as Lior Gantz recently said in a video we did with him here at WAM, it's almost as bad to own only gold and silver as it is to own no gold and silver. You need to diversify, 100%. Never put all your eggs in one basket. So anyway, John, closing this off, what do you have to say, your bottom line, what do you think?
Well, bottom line is you got to be diversified, and that is number one rule of any professional and good investor out there, and not just be like Warren Buffett that's diversified in stocks,
eating lots of ice cream.
Yeah, and eating lots of ice cream. No, you got to be diversified. That's the number one. And actually, my Australian report, if you want to get that, I actually come up with so many solutions that you could implement. And of course, that's all my opinion, but my opinion is based upon historical evidence of how things work out when you have these debt crises, when you have the collapses in currencies and so on. It's not just me just pulling some numbers out of a hat. I actually go deep into understanding how the economy collapses, and what's going to happen in any of these economies is we're going to just keep on watching these governments, running deficits, printing more money, getting more debt. That's the thing that we hear. We hear about growth. That is the number one factor. The reason why they need it is because if you don't get growth, the whole system collapses completely in on itself. itself because it's not sustainable anymore. When you print money from the bank, when you take out a loan, you take the principal, you borrow that from the bank that lends it to you, and then you actually take you getting charged what's called an interest on top of that. That interest doesn't exist in new money, so they constantly have to add more debt to pay off that new interest that's ever increasing, and it's a vicious cycle that's never going to end, whether you're in Australia, in Norway, in Canada, in Finland, in Mauritania, wherever you are.
Same tactic everywhere.
Yeah, no, the same where you are in the world. Doesn't matter where the heck you are in the world. If you have a fiat currency, if you get into debt and you have this fractional reserve banking system on your hands, you have a problem, and we have that problem for the first time in history on a global scale. We never had that. We had some people here and there that went into completely fiat and then destroyed the currency, but then there was other ones over here that had gold and silver, other precious metals. That is the problem. We need to understand and watch for what's going to happen, because the number one rule when it comes to a currency that's failing is the trust factor in the currency. And that's why you're seeing the constantly, in December, remember how Mnuchin and Trump all got out and, touted how great the stock markets are great, it's fine. There's not a liquidity problem. That's what Mnuchin said, of course. Was there a liquidity problem? Right? So it's all about the trust in the system. And when that trust breaks, when you actually say that I had enough of your BS that you're pushing down my throat, you're stealing away from me from that inflation, printing all this currency in thin air and enriching yourself and your friends, then it's the time to that's when the currency completely collapsed. And it doesn't take long. Look at Venezuela. It was about a year that it took until the complete collapse just started, and it just ramped up like crazy, and the bolivar is now worthless. And that is what you're going to see here as well in any other country.
Yeah, and it's all based on faith, guys. And of course, we were talking about Venezuela for years and years, and people called us crazy. By the way, thanks for bringing up Mauritania. I'm going there soon, so that'll be fun. But anyway, so I think it really comes down to look, we got a lot of comments here at YouTube for years. People telling us we're crazy, we're fear-mongering. We still get them on every single video. Chicken Little, the sky is falling. And we've been talking about this for a long time. And yes, it's true, we have been. But nonetheless, we've never put a date on it. We're just talking about fundamentally obvious things that will happen. Eventually, they are inevitable to happen. Eventually, this is just basic economics. It's not even like macro, crazy, over-the-top economics. This is basic economics. So, it just goes to show, you look at history and you see the banks are bankrupt. They are insolvent. They've been pushed off for so long. Their cash to deposit ratio, as John has gone into so deeply, as well as incredibly low, ridiculous, over the top insolvency levels. We're seeing all the signs of recessions in all these countries, yield curves inverting. We are seeing the everything bubble worldwide. We are seeing it propped up so incredibly much. Derivatives bubble, multi-quadrillion-dollar level, pension shortfalls, etc., etc. And then with the housing bubble, we're seeing all the things that we saw before: collateralized debt obligations, mortgage-backed securities, subprime lending, and of course the credit default swaps. And we're seeing all these things happen again and come to fruition. And what do you expect is going to happen? Oh no, this time it's all going to be okay because it feels comfortable in our slumber to just be sitting back and going, everything's fine. Let's not look at what makes us uncomfortable. Let's just look at things that make us happy and feel good about ourselves for the time being, now in the now in the now. Not, basing it on logic. Let's base it on emotion. And emotional reaction is not as good as logical reactions. Of course, emotional intelligence is an important factor in humanity, but when it comes down to making decisions going forward and looking at history, you have to be logical, or else you get run over underneath the foot of those who are also logical, that are in power, that are using you, that are abusing you, that are sacrificing you as pawns for the king and the queen. You have to be logical, you have to be ahead of the curve, and you have to protect yourself, be responsible, be self-sustainable and independent. You need to protect your purchasing power, you need to decentralize, and you need to rule yourself. And that will put you far above those in power that are trying to trample you underfoot. Because if you, as Orwell said, if you want a view of the future, imagine a boot stomping on a human face forever. And that is what is happening, and we have seen it so normalized and pushed forward to this extent where we all just accept it, don't accept it, break free from it. It doesn't mean there needs to be protests, there doesn't need to be a violent revolt, there just needs to be you as an individual taking that opportunity, understanding these things, understanding money, controlling your money, and protecting yourself against this. It all comes down to your individual responsibility. Anyway, John?
I just got one last thing that I have to say. Krugman, stop peddling your freaking Ponzi scheme on Facebook on my pages. I'm getting really sick of it. And I want you to just maybe pick up economic history books that's past, after 1913, because maybe you can get some advice on what you're doing now and how you are destroying the world around you, you disgusting human being. Sorry.
Yeah, it seems like he's getting all of his advice from like Alexander Hamilton or something. But anyway, we will end the report there. You know what to do, folks. Break free, rule yourself, and do whatever you can to protect yourself. It comes down to you, no one else. Stop being dependent because they're dependent on your dependence. And they love it when you're dependent. They love it when you're in debt. They love it when you're in poverty. They love the middle class being wiped out. They love the ability to have complete control over you as an individual, as part of some giant collective that they can extort, pushed to the slaughter, all while you have a smile on your face because you got grass to eat in your little enclosure. So anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change, and don't let a dingo eat your baby. Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.